Now let's look at the exchange traded funds. We can do a lot of very good research here. The first thing to think about is when we think about investing in exchange traded fund and ETF, we need to open up the box to see what's inside. Macro axis give us a very good graphical representation. So for example, I want to look at the REMX, rare earth. Rare earth, I see that it has 41% in China, 27% in Australia, 11% in Canada, right? Compared to SPYX, which is the SPY, but excluding the fossil fuel company. So SPYX has 97.19% in the US, right? So to some investors, the geographic location is very important because uh, because some countries grow faster than the others, and some countries have different regulation, right? Depending on the regime. I can dig deeper into SPYX, and here I see that they hold 24.42% in technology, 14.98% in healthcare. Well, technology has done well for some time. Looking in the future, if the valuation is too high, then I may be concerned that I'm holding too much in technology. ETF DB, ETF database. And here I look at this ETF called VYMI, right? Which is a dividend paying ETF. I see that it has 626 holdings, which is very well diversified, right? Very well diversified. And top 10 account for only 15%, and the top 50 only 39.48%, right? In terms of sector breakdown, I have 28% in financial and 8.5% in industrial, 8.5% in basic material. So knowing that financial, industrial, and basic material tends to be at the tends to do well at the uh, later stage of the business expansion, right? Later stage of the business expansion, when the economy is powering up, right? The banks are lending more money, the yield curve is steeper, they are generating more profit. That's good for financials. And companies are running down their inventory, they are really able to sell more. And because inventory have run down, there would be more demand for basic materials and energy. So knowing the breakdown helped me to think about, is this the right distribution that I want, given my outlook for the near future. In terms of the market breakdown, I see that VYMI has 90.8% in large cap. Maybe I'm comfortable with large cap instead of taking too much risk with small cap. So small cap here 0.65, I might be comfortable with this, right? In not holding too much small cap. Region breakdown, we have 41% in Europe and Asia Pacific 23.52, Asia 20.33. So this is an ETF that is less in the US, more in the international space. Right? Maybe I feel comfortable with that, especially if I think that the dollar is going to weaken. If the dollar weaken, the other currency will strengthen. That will be good for this ETF. Country breakdown, we see that the largest component is in Japan, followed by the UK, Canada. right? So this might be too much detail, right? I'll be happy just with the region. Money.usnews.com is also very useful. And here we are analyzing the global clean energy ETF, global clean energy ETF. And what we see is that the largest component is the United States with 42.5%, followed by the Eurozone 15.5%. And therefore, when we dig deeper into this, we should not be surprised that the largest portion in terms of the sector weights comes from technology, 42.5%, and followed by utilities, 37.36%. Very little in basic material, communication service, consumer cyclical, and so on. Morningstar website is very useful to give us a comparison. And here I'm looking at XLF, the ETF that has a lot of financial stocks. I see that the alpha, right, is 1.05, which is a lot better than the category of minus 0.22. The beta 1.12, pretty similar to the category 1.11. And when we look at the Sharpe ratio, this fund has a higher Sharpe ratio than the category. So this looks like a pretty good uh, uh, historical performance from this fund compared to the category. Morningstar also give us more details. For example, this XLF has a very high yield and lean towards more value stocks, and the momentum here is pretty low, and the quality, volatility, and size is about the middle, right? So as someone who wants more yield and who is a value investor, I am reasonably happy with this distribution. We can also use this Morningstar to look at how ETF compare with the category average. Right? I would look at the price to book because price to book is very useful when we evaluate financial stocks. So the price to book is 1.06, slightly higher than the category, but 1.06 is rather low because we are talking about the share price that is pricing. The share price is about $1 compared to the net book asset. So for every $1 of net asset, the market is paying only $1.06. So there's not much premium. So we are almost valuing this ETF as a liquidation value or as a debt company, right? We are not pricing in a lot of uh, potential for earnings, right? As an ongoing concern. So I like this a lot, right? In terms of PE ratio, this fund is 12.26, which is lower than the category of 16.79. So this makes this somewhat cheaper and less optimistic. So I would have to research further to find out why is the PE ratio lower. Why is the market discounting some bad news? If this is at a time when the economy is weak, and I expect the economy to recover, then the economic recovery would likely push up the PE multiple. We can dig deeper and look at the different holdings. As you can see here, the XLF has a lot of Berkshire Hathaway, almost 15%, followed by JP Morgan Chase at 11.2%, right? And we have the nice little chart here that show us how the individual stocks like seems to have a bottom up here, Berkshire Hathaway and JP Morgan and Bank of America, BlackRock, and so on, right? So graphically, it simplify our research a lot. We can also look at the details like the Sharpe ratio here, right? The Sharpe ratio here is minus 0.02, which is better than the minus 0.15 in the category, but minus 0.2 means that on a risk-adjusted return, right, we are not getting a lot of risk-adjusted return. So maybe this is because of this 10-year historical performance. If we are more optimistic in the future than this last 10 years data, then we would find this reasonably okay. Beta is slightly lower than the category. At 1.45, it is still uh, volatile because for every 1% change in S&P 500, this XLF would move by 1.45 times.